Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1618 AN. Today's date is July 18th, 2018, and the title of the episode is The Plan, Hide Data, and Bring the Stock Market Down. Let's get into the economic collapse financial news. Now, we've been talking about how each side is going to try to control the narrative, and we already see what the central bank is doing, and they're really pushing their agenda forward because they realize the economy, well, it's falling apart very, very quickly, and they're very worried that they will lose control, and they like the control because they want to form their narrative as the economy falls apart. And yesterday we talked about how we were in stage 2 of this housing bubble, moving into stage 3. And if we look at housing right now, housing should be booming at this time. Prices should not be coming down. We should see a huge amount of traffic. We should see mortgage applications moving up. We should see starts, permits, all of it moving up. Now, in May, we saw that building permits, they plunged. And June, they expected that everything was going to rebound, but it didn't. Permits dropped 2.2% month on month. Housing starts collapsed 12.3% month on month. This is the third month of declining permits in a row and the biggest drop since November of 2016. Now, total housing starts decline year on year for the first time since 2017 of December. And what we're looking at right now is everything is starting to break apart and fall apart, deteriorate, and everything is declining now. Again, we mentioned it's not just here in the United States. It's happening all around the world. As the Fed continually raises its interest rates, the LIBOR continually pushes up. It pushes many, many individuals out of the market, and we're starting to see the effects of this. Now, of course, the Fed is doing this very, very slowly. They don't want everyone to catch on in what they're doing. And if you just look back in time and you look back prior to 2008, 2005, 2006, and especially into 2007, you can see they were raising the rates, and they quickly then started to drop them because they realized what was happening in the housing market. And this is when we saw people in California with their adjustable rate mortgages. They just left their homes, left everything inside, and they just couldn't afford to stay in those houses. Now remember, there's a lot of speculation out there. There's a lot of people doing a lot of different things, and we're starting to see a problem in the housing market. Now, if we look at the Fed, we know what their plan is. We know what they're trying to do here. The Fed is saying that they're going to be raising the interest rates. They're going to push it up. And remember, everyone's talking about the Treasury yield curve. It's going to invert, which means it indicates a recession. And we need to think about what the Fed has been doing. The Fed has been hiding data, changing data, making everyone think that they're unimportant. And we talked about all the different things that they were getting rid of or changing. Their balance sheet, the change in the yield curve. And when we start to look at this, we can see this is the reason why they are changing how the yield curve is calculated. But of course, those people in the industry, they're going to continue to calculate the yield curve like they have always done. But the Fed wants to put this information out there, and they want everyone to start looking at the way they're doing it because they understand that this is an indicator of a recession. And this is exactly what's happening here. Now, when we look at this, why is the Fed worried about people catching on what the yield curve is doing? Well, their plan might be to crash the stock market to save the bonds. Now, the single most important bond in the world is most likely the 10-year U.S. Treasury bond. This bond represents the risk-free rate of return for a total economic cycle, roughly 10 years, denominated in the global reserve currency, which is the U.S. dollar. Put simply, this is the bond to watch if you want to keep an eye on how financial systems are acting. It is the bedrock for all risk. And its yield represents rate of return against which all risk assets are priced and valued. Now, with all that in mind, we need to note that the yield on the 10-year U.S. Treasury has broken above its long-term 20-year bull market trend line. This is a major problem, and the Fed is going to fix it by crashing stocks. So the fact is that the Fed has to act to stop the bond bubble from bursting. And it's going to do this by, of course, crashing the stocks and driving capital into the bond market to force yields lower. What does this mean? The stock market is now on borrowed time. And remember, they have the ability to pump the stock market up. They already have central banks out there purchasing stocks. They have banks where they're receiving the free money, they're going in, and they're also purchasing stocks. They have the ability to pump the stock market up, and they know this. So what they're doing right now is they're going to push the market to the edge, bring it down, and of course, when this happens, we know that certain corporations are going to say, okay, we need to cut back, we need to lay off, and it gives them the excuse to do what they like to call restructuring, which is getting rid of the low-lying fruit, getting rid of a lot of people to save a lot of money, because we know a lot of their books are fake, phony, and false. And at this time, we can see this is part of the plan of what the Fed is doing. Now, when that comes down, the economy is going to be reeling at this time, but they don't care about that. That makes no difference to them if it's doing well or not doing well, because they make money either way and they have full control of the system. Remember, they're not dealing in paper currency. They like hard assets, and they don't really care what happens when things start to fall apart. Actually, they like it. They like stealing the wealth from the everyday person. This is what the central banks are all about. Now, there are certain countries out there that are very nervous about central banks, the private Western central banks. They understand what is going on. And we see that Russia, they have been liquidating the U.S. Treasury holdings. And if we look at this, we can see that Russia, they have been dumping Treasury holdings. According to the latest just released Treasury International Capital Update, TIC, in May, the selling of treasuries by official entities continued, with another $24 billion sold in the month of May, when yields continued to rise and eventually hit the 2018 highs of 3.11%. And this was Russia. They were dumping treasuries. They're protecting themselves. They don't want to be a part of this whole entire system when it completely comes down. Remember, Russia does not have that much debt right now, and basically, if they get rid of these treasuries, they are then protecting themselves. Now, what's very interesting is that Powell, he was testifying in front of the Senate committee, and Senator Heidi Heitkamp decided to ask Powell a question, and she cited a speech from former Fed Chair Ben Bernanke in an attempt to get Powell to be more specific with her question. She said, "Would you agree with Ben Bernanke when he said in 2007, a speech that he made on trade, that restricting trade by imposing tariffs, quotas, or other barriers is exactly the wrong thing to do for the economy?" This is what she asked Powell. Powell's response was simple. "Assuming you're talking about them remaining in place over a sustained period of time, absolutely." Powell also made his most direct warning about the risk to the economy as a result of escalating trade wars. He went on to say, "We hear from our extensive network of business contacts a rising chorus of concern. As you pointed out, lots and lots of individual companies have been harmed by this. We don't see this in the aggregate numbers yet because it's a 20 trillion economy, and these things take time to show up. But we hear many, many stories of companies that are concerned and now beginning to make investment decisions or not make them because of this." Now, remember, Powell is out there and he's saying that the economy is doing fantastically. Everything that they've done has improved the economy. And these tariffs and these tax cuts, well, this is uncharted waters and it might bring the whole system down. Once again, what they're doing is they're trying to create this narrative of why this is all going to fall apart. And we need to remember, the central bankers, this is their system. This is what they're protecting. And anything that goes against what their system is, it's going to be disastrous. It's going to be no good. Just like when the Brexit vote was being held, what did they tell us? If the people decide to vote themselves away from the EU, the entire economy would completely fall apart in the UK. And then we had the Brexit vote. And what happened? Well, it didn't fall apart. They were completely wrong. Even now they're saying if they go ahead and they detach themselves from the EU with some type of hard Brexit, not this ridiculous Brexit that May came up with, their economy would implode. Basically, the central bankers, they do the same thing as the deep state. They make these threats, they scare people, they put fear into individuals, because what they really want is they want to make sure that everyone understands that if you try to leave the central banking system, the private Western central banking system, you will not be able to survive. Why do you think the central bank, the biz, is out there and they're trying to explain why you can't have a different currency than the one that they are issuing? It's completely impossible. It won't work. Don't even try. Don't even try to use cryptocurrency. Don't even try to create your own currency. It's not going to work. It's not centralized. It has to be a centralized currency. The central banks have to handle everything. They have to handle everything with trade. They have to handle everything with interest rates. They have to handle everything with the creation of currency. Why? Because they need total control of the system. Because their system is weak. Their system does not work for the people. Their system would rip apart if they didn't control every aspect. And controlling every aspect doesn't make the system better. Actually, what it does, it hurts the everyday person and makes them wealthier and wealthier. This is why we're seeing wealth inequality right now. Because what their system has done, it has destroyed everything that we have today. So they're laying the groundwork right now. They're pushing their agenda, and we're going to see a lot more of this, and they're going to continue with this theme, and they're not going to let up. On the other side, what is Trump and the Patriots doing? Now, Trump is out there saying that this is the best economy ever. Now, this is a pretty darn good strategy that he is using. Think about what he's doing right now. Pushing the agenda to say that this economy is great. It's fantastic. Unemployment is low. Everything is great. Stock market is fantastic. When it all falls apart, he can make the case where the Fed was saying the economy was great, and he can make the case saying, well, we got this economy from Obama. The economy was doing fantastically. All the numbers that you were giving us, like you were giving Obama, showed that the economy was doing fantastically. What happened here? Now, of course, they're going to try to blame the tariffs. And they're going to try to make the case that it was the tariffs. They're going to come out with some type of story, just like they did in the 70s, where they said we had to come off the gold standard because of speculators. But if you notice, they never really showed any proof. They really never showed what was really going on. They just had the mainstream media come out and tell us that it was speculators, that this is why we have to do this. So what does Trump and the Patriots need to do at this point? And we know that Rand Paul is behind this. All they need to do is present evidence, truth, to show that the tariffs had no effect on the economy whatsoever, and show what the central banks have done. It's very, very simple. And once they do this, he could then take it to the next level and say, well, they've done this, this, and that. Maybe we should look a little bit closer to see what else they've been doing. And he can get the ball rolling here. And of course, in his position with other patriots, they know exactly what's been going on. They know exactly how the Fed works. They know exactly what is happening here. So they do have the ability to create their narrative, to bring it out into the open, and to show the American people what has really been going on. Because again, we have no idea what the Fed is doing. We have no idea what their books look like. We have no idea about anything, and they're supposed to be working for the people and actually controlling the people's economy, but they're a private entity. They're not part of the government. It is now time to look inside of the Fed to see what they've been up to all along. And I think this is going to be the ultimate bombshell. And this is going to be the ultimate takedown of the central bank, the deep state. But one thing is for sure, the system's going to have to restart. And we're going to go through a transition. It's going to be a little tough. This is why you need to prepare. This is why you need food and water, because when credit freezes up, when they're trying to get rid of the central bank, when you can't get supplies from stores, when we see inflation, when we're moving to a new currency, it's going to take a little while for things to calm down. Think about the 1970s when we're coming off the gold standard. how many people didn't have jobs, how we couldn't get fuel. In the UK, there were blackouts. We were going through a major transition at that time. This time, it's going to be a lot worse. Last time, we didn't have this much debt. Last time, we didn't have all these problems. Last time, when we were moving from the gold standard onto the fiat system, guess what? The dollar, well, that was still the reserve currency. This time, I don't know if the dollar is going to be the reserve currency. Most likely not. And we're going to be moving to something completely different. So we're going to go through a lot of bumps, a lot of hiccups. And for many people, it's going to be quite tough. And this is why you need to be prepared and ready. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.